Hello everyone, my name is Chris Titley and welcome to the FinTech Australia podcast. The FinTech Australia podcast takes listeners on a deep dive across the FinTech industry in Australia, focusing on the challenges, opportunities and big stories our community faces. Let's get to today's episode. Hi, it's Chris Titley here as part of the FinTech Australia Business Spotlight series. I'm joined by Jeroen van Son, CEO of Verrency. Jeroen, thanks so much for being on the FinTech Australia podcast.
Thanks for having me, Chris. It's great to be here today.
Now, as part of the Business Spotlight series, we get to sort of unpack particular businesses and go into a bit of a deep dive. Let's go straight into it, Jeroen, with the Verrency, the history of the business, how it began.
So Verrency had its origins as a payments innovation platform, and what that was intended to do is to make it easier for financial institutions to innovate and provide new use cases and around the moment of payment. So it's all in the retail payments space, focusing in on large financial institutions that have difficulties in innovating and developing new use cases for their customers. The thesis was that big tech, Apple, Spotify, Netflix, etc., they service their customers in the moment with relevant offers, relevant use cases in real time. And banks, for a variety of reasons, find it particularly difficult to reach that level of service provision, largely because of systems infrastructure issues and the sheer weight of risk and risk remediation work that's going on in the financial sector. So Verrency was established to make that easier for established financial institutions, and that's how it was founded. In 2021. We made a change in strategy towards a strategy that I've called technology for good. And technology for good gives us a really sort of clear positioning statement that we develop technology products for financial institutions, banks, but also for merchants, and that do good for the environment and the societies that we operate in.
Excellent. So Australian-based business, but taking on the world, but obviously in regards to technology for good is global. Can you talk about the Verrency product and platform and how it's going currently?
Yeah, happy to, mate. So it's a global platform, right? It's a platform business. It's technology sits in the Amazon Web Services cloud, which makes it global by design. It's built for financial institutions, so it's robust. PCI DSS, for us payments nerds out there, we are PCI DSS 4.0 compliant, which is a little bit more compliant than what is required. But we service financial institutions, so we have to be robust in every aspect of the world. So the platform is global. The product that we're focusing on right now is a carbon insight and offset product, and we think that's very topical. If you just take a look at the news media over the last couple of weeks, we see the bushfire season starting early and starting ferociously in Australia, and obviously that has its origins in global warming. So the product that we have launched is a carbon insight and offset product. Now let me just take a step back and explain that in a bit more detail. So our view is that if you're in the business of solving global warming, it's really government and industry that are tasked to solve that primarily, and we see government doing its role, but as per usual, that moves pretty slowly. Yep. We see industry, some industries acting, not all industries acting, and it's not happening nearly fast enough or in a way that's decisive. And what we've observed is that the third sort of group of constituents, which is consumers, they are largely ignored in the problem of global warming. Yet, 60 to 70% of greenhouse gas emissions come from consumer household spend. Right, so the stuff that we all buy every day, and to a large extent, we put that on our debit cards, our credit cards, our digital wallets. That contributes 60 to 70% of these greenhouse gas emissions. So we zoom in on that customer segment, consumer segment. So the product we've developed is calculates the carbon emissions from your daily transactions. So anything you buy, goods or services, we calculate the carbon emission footprint of that purchase, and we explain it to you as a consumer. What does that mean, right? Because right at the moment, it's very difficult for the average customer or consumer to understand what their individual impact is on global warming. So a lot of that has to do with education and just informing consumers about their the impact, their footprint. We play that back to the consumer in more relatable terms than kilograms and grams of carbon dioxide, and then we will give consumers just alternative choices. For example, if you get in your car 5 days a week to travel to work, we can say, if you took public transport 3 days a week, your carbon emission footprint would reduce from X to Y, whereby Y, of course, is a lower number. Also, we think importantly, we can benchmark individual consumers against a peer group, so you can see how you're doing. Are you in the sort of the top 2% best performing customers, meaning least polluting customers, or are you in a different segment? And we give you some opportunities and options to pollute less. Then lastly, we're of the view that we're all human beings. We live and we will continue to emit carbon. It's just a fact of life. And our solution allows for customers to then purchase carbon offset credits to offset any remaining carbon emissions that they create. All that is baked into the existing payments experience. In other words, a customer can live a carbon neutral life by using their cards, their debit, credit, and wallets in exactly the same way as they did previously. So no change, no friction, but now in the knowledge that they can live a carbon neutral life.
Jeroen, I'm interested to know from a consumer point of view. Let's say, as an example, using an Australian example, I go to Bunnings and I spend $100. Grab my sausage sizzle on the way out, but the transaction, is $100 from Bunnings. But different items that I buy may have different impacts. So I'm just trying to go from a bit sort of a deeper level, or is it not really too much different from a deeper level in terms of whether I buy a spade or whether I buy a desk, for instance?
Yes, it's the calculation that we have developed, the calculator, is as good as the data, the input data that you get. And the input data in a payments message, as most of the audience will appreciate, does not go down to the individual product level or storekeeping unit, SKU, as it's tend to be called. But we have tried to normalize as best as we could in our calculation. But it's important for the audience to understand that this is an estimation.
Yes.
It's not an exact science, and it can't be.
No.
And many people point to the fact that the SKU level data is not embedded in the payments message. That's true, and that's one part of the explanation. The other part of the explanation is that if you buy a deodorant stick from Johnson & Johnson, Johnson & Johnson haven't identified the carbon emission footprint of that particular deodorant stick either. So that the information at the SKU level is simply not available. We believe that it should be, and we also think that if you look at the trends globally, the regulatory trends, there is a discernible trend towards accountability for manufacturers, and we think that over time regulators will force manufacturers to put that information on their packaging and on their products.
Yep.
But right at the moment, it's not available. What I do want to say is that we've built a calculator, and we have submitted it with one of the big four accounting firms, and we've asked them to really sort of pull it apart, shoot at it from the hip with a bazooka, and let us know what they think. And they gave us some feedback. They said the initial version was okay, but not great. And then we took their feedback. We adjusted the calculator based on their feedback. And now we've got the certificate of quality from a big four firm, which is good. It's promising.
Yeah, fantastic. And I suppose, you're talking about the base level. We've got to start somewhere as a consumer. There is an ignorance level of what is good, bad, indifferent. I mean, an analogy would be sometimes with food. You think, oh, well, this is delicious. Oh, it's terrible for me, or it's good for me. But the education around what's in it, and and the rules and regulations, I think is very important moving forward in terms of an education. I'm just interested now in regards to the partnerships that you've got, and the banks that they're interested in your product, and how that's going.
Yeah, if you allow me just to take half step back,
Sure.
and the half step back is important because the strategy that we've developed really sort of rests on two very important assumptions. And assumption one is that if you want to make an impact on global warming, you have to be able to scale this and scale it globally. Otherwise, it ends up being a hobby, and you're not going to have an impact. So scalability is design principle one. Design principle two is to do that in a manner that has zero customer friction. If you ask customers to do too much, we all know the drop-off rate is going to be too high. And again, you're not going to get to an outcome. So those two design principles are behind the strategy. Now, let me zoom in on the partnership side of your question. So we've developed a partnership with Visa, and obviously the largest payments network in the world. And Visa has embedded our technology in their sustainability products. Now, what does that mean? It means that there are an awful lot of Visa account managers and client-facing staff in the Asia-Pacific and Central Europe, Middle East, and Africa region that speak to their bank clients on a very regular basis, and they are promoting and selling the Visa sustainability products. And in many cases, those products include the Verrency solution at its core. Now, that in and of itself drives a tremendous amount of scale, and it leads us to be able to field an inbound pipeline of bank customers. And I think that's the second part of your question, Chris, is how's it going? It's going very well. We have launched our solution with Maybank in Malaysia, which is Malaysia's number one bank, in a phenomenal launch ceremony in August with their board of directors present, the group CEO. The United Nations was invited for the launch, and it was it was an amazing, a very cool event. An honor to be part of that. We're now going live with a very sizable bank in Taiwan, and that'll be followed by another bank in Malaysia, and that one will be followed by a financial institution in Singapore. So we think we'll exit this calendar year with 3 or 4 banks, and we think we will exit this financial year with probably 8 banks or 9. We have a growing pipeline that's filling up. There's not a bank in the world that doesn't have an ESG strategy, and our solution gives a commercial bank a really tangible sort of option to present their consumers with tools that educate them on their footprint, and then also give them the opportunity to act on that information by buying carbon offset credits.
Fantastic. Now, certainly a global opportunity, as you mentioned. There wouldn't be too many banks not thinking about that, and particularly, at a board level as well. I'm interested to know, in regards to your presence here in Australia, obviously customers overseas, how you think the sort of the fintech ecosystem is panning out here. It's been a pretty tough year across the sector, but moving forward to 24, is there some light at the end of the tunnel in regards to investment and the turnaround in technology stocks, etc.?
So let me reflect on that with a Verrency lens first, and then maybe a broader lens after. So from a Verrency point of view, we are actively raising capital at the moment. We have a venture crowd raise on foot at present. So I welcome your audience to have a look at the venture crowd platform where sophisticated individual investors can invest in Verrency and support our strategy of technology for good. But there's no denying, Chris, the global markets are in a state of stress. I think that's a known fact. I think FinTech has been impacted disproportionately. Valuations have come down considerably, and it's one of those moments where quality will remain, and if you don't have scale or an opportunity for scale, and if you don't have a solid business model, I think you're going to struggle. We're getting thankfully we're getting a lot of positive feedback on the narrative, and a lot of investors that really like the narrative of educating consumers and being a part of the broader sustainability trend, and they particularly like our scaling strategy and our partnership with Visa. So I'm cautiously hopeful that we will be able to close our equity round, but I'm not complacent. We're talking to a lot of investors. From a broader point of view, I think, like I said earlier, this is one of these moments in the broader sort of curve where if you have a solid product, a solid business model, and a good team, there's every chance you'll survive. But if you don't have any of these things, I think unfortunately there will be more damage in the FinTech industry before it gets better.
Well, it's and there's some good points there in regards to being in an industry and resilient, and obviously capital efficiency comes to the forefront. We'll leave it there. Thanks so much for giving us the insights here on Verrency, the history of the business, the progress thus far, and also the massive opportunity which you have outlined. And congratulations on the success of the clients that you have picked up thus far, and looking forward to catching up in the new year.
Amazing, Chris. Thank you so much for the opportunity, mate. Thanks.
Thanks for listening to the FinTech Australia podcast. I'm your host, Chris Titley. The FinTech Australia podcast is a collaboration between FinTech Australia and Sub11. For more information about membership options, news and the events coming up, jump on to the FinTech Australia website. Have a great day. Thanks for listening, and we'll catch you next time.